Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we are going to be talking about Atossa Therapeutics. This one has been popping off on the day. There's talks about there being a bit of a short squeeze, a bit of a fundamental breakthrough in what Atossa is actually creating. And yeah, let's just talk about Atossa, see what I think, see if it's time to buy, sell, do whatever. If you guys enjoy this content, make sure you guys leave that early like on the video, as liking the video helps with the YouTube algorithm, and it's just the #1 thing you can do to help me out on this channel. So without further ado, let's get right into the video. Alright guys, so Atossa Therapeutics is sitting at $6.68 per share. Now, I made my first video on Atossa Therapeutics when it was at $3.30 per share, and I did a few updates along the way in the form of community posts, and since then I've made 2 videos on Atossa Therapeutics. Wasn't dedicated its own video, so I figured now today's a great time to make its own video. And yeah, I mean, it's up on the day. Do I recommend buying it? Well, it's up a lot. If we just take a look at the past month, it's up 100%, and past 3 months 172%. Now, the reason that we got into Atossa Therapeutics, and as you can see, Renaissance Technologies LLC reports a 570% increase in ownership. Now, this was filed on May 13th, 2021, and they basically accumulated an enormous amount of shares. So I had to look into it because Renaissance Technologies is one of the hedge funds that actually beats the market. They're a high frequency trading hedge fund that is super algorithmic, and they consistently beat the market by upwards of 50% due to their algorithms and high frequency trading. So when I saw that Renaissance increased their holdings by 570%, I was like, well, this thing's gonna take off. Like, there's no way that they're just increasing it by this much for no reason. It's literally Renaissance. They always beat the market, and they were right. $3.23, that's when they increased their holdings, and now it's at $6.62. So I'm not gonna doubt Renaissance ever. I didn't doubt them the first time. If I ever see Renaissance increase their stake like this again, I'm going all in. But anyways, this one is up a lot, guys. You can't ignore the fact that it's up 100% in the past month, and there has been some fundamental news, some fundamental changes in the company, which is why it's been running. So there's been promising news in regards to Atossa's breast cancer treatment, and that's a big reason of why it's been running. Also, as of last week, it was to be included in the Russell 2000 and Russell 3000 index. So that's another reason that people are going to start buying. More institutional investors are more keen to buy a stock that has an index behind it, such as a Russell 2000 or 3000. So that was about a week ago, and as you guys can see, Atossa ran about 42% in this past week. So that news was also a huge catalyst for Atossa Therapeutics. If you guys want up to $70 in free stock just for signing up, check out those links in the description or in the pinned comment section to sign up for Public, where you get up to $70 in free stock just for signing up and depositing at least $1. Now, Public is a stock investing social media app, so you can invest in companies, you can share your investments with your friends, you can follow people like me. It's kind of like Twitter, StockTwits, and Robinhood all in one app, but it's not like Robinhood in the fact that Robinhood has absolutely horrible customer service. They sell your trading data. They do none of that. Public actually relies on tips alone, so you know they're going to be giving you the best customer service. And if you do have a problem with Public at all, you can openly on their social media app literally just at someone from their team, and then boom, you just expose their whole platform, because it quite literally is a social media. So you know they're going to give you that best customer service, which is why I absolutely love Public. I've had absolutely no problems working with their team, so I love Public. Get up to $70 in free stock by using those links below. and let's get back into the video. Now, there's also talks of there being a short squeeze, so let's just go over some of the short squeeze data. Alright, so as you guys can see here, there's an estimated 11.84% short interest, and that short interest is up about 4% on the day, so more people are shorting as of today. Now, a majority of these shorts got in around $3 to $2 a share. So you have to keep that in mind when buying this stock. A lot of the shorts are down, which is why there's been a little bit of a short squeeze on this stock. Now, at only a 12% short interest, I don't think there's going to be some insane short squeeze like some of these other stocks. However, there's still that potential that some of these shorts are going to cover, and with their new developments in this breast cancer treatment, I do think that fundamental change is what's going to actually get these shorts to cover on this stock. Now, at the end of the day, any stock that's up about 100% in a month is gonna be a risky bet. So while you can make money on it, I have to give that warning that it can come crashing down just as fast as it comes up. And if you did buy it around $3.20 when I first talked about it, definitely consider taking profits. It never hurts to make 100% return. And if you bought in around these elevated price levels, around $6 to $5 a share, just know the risk. Just know that it has been running already, and there's more room for it to fall now that it's already been running. So if you are in on this one, definitely have a plan for an exit, because it is a super volatile stock, and just the fact that it's up 14% on the day is just an indication alone that this thing has massive volatility. If it can be up 14% on the day, it could be down 14% on the next day. So just understand the risk that you're getting into with a stock that has such a low market cap, and it was once a penny stock just a month ago. And yeah, just understand those risks. So in conclusion, there's definitely been some fundamental changes in Atossa in regards to their breast cancer treatment, some positive news on that, which has helped kickstart this whole short squeeze or just the constant run on Atossa. It's also been added to the Russell 2000 and 3000 index. So there's going to be passive investment into this company as of now, which actually does decrease some of the risk. However, the biggest risk is that it has run so much. And when I started looking at it at $3.20 per share, it's a lot different looking at it now at $6.60 per share. So any stock that increases that much in such a short period of time, just know it comes with increased volatility and increased risk. I'm not saying that this thing can't continue to run, because it could. It could definitely hit $10 a share. But I'm personally not buying it because I am already gambling on some other stocks, and I generally try to avoid some of these high risk investments with companies that I don't understand. So for that reason, I'm not going to be buying it, and I am not a financial advisor, so it is definitely up to you guys on whether or not you guys want to get into this company or not. And that's about it for the video. I hope you guys have enjoyed. I hope you guys learned something, and yeah, have a good day. Peace.